everybody, Monday, May the 12th. Hope everybody had a great weekend. Mother's Day, so happy Mother's Day to everybody.
Yeah, kind of at least here in Charleston, kind of rainy, a lot of thunderstorms.
Yeah.
And my wife, Caitlin, she was pretty happy with it, just like a quiet day in the house. Myself and the kids, we tried to step our games up a little bit, helping her on, like maybe doing some chores we usually don't accomplish very well. But yeah, she seemed pretty happy.
Yeah, that's good. I made a nice dinner last night, and yes, kind of the same thing. Stuck inside with the rain, which sucked. Looking back at last week, it was a super eventful week in global markets, right?
Yeah, it's crazy. So obviously we had the Fed meeting and then a bunch of news surrounding trade deals. What do you want to tackle first?
I think we should jump on the Fed meeting.
Okay,
right?
Yeah, so, you do the Fed meeting.
As expected, so the Fed left rates unchanged. And then afterwards, Fed Chair Powell came out and made a lot of the same comments really that we had in last week's video, right? Talked about mostly surrounding just why GDP, that first quarter number, came in at that negative rate, right? Just had to do a lot with that kind of companies front loading for the tariffs and stuff, yes. Right? So a large kind of net export number, net export import number that came in negative.
Yeah, exactly. And then and then just a lot of news surrounding trade deals, right? And it started with the U.S., UK, right, the United Kingdom, kind of earlier into last week. And so just a couple of headlines out of that deal. 10% universal tariff kind of remains. So it sounds like that's kind of going to be like the baseline for the U.S. trade deals, like keeping this baseline 10%. But really what really is pushing markets, at least this morning here in the U.S., up about 3% pre-markets here in the U.S. is some of the coming out of the China-U.S. trade deal, or trade negotiations, I should say. I don't think they've landed on like final deal, but U.S. Treasury Secretary Scott Bessent and his team apparently coming really close with China, where the U.S. has reduced what is effectively 145% tariff down to, I think it's down to 30 now, if you include like the little so-called fentanyl piece. So down to 30%. China, and this isn't just coming out of the U.S. This is like joint statements where China is also echoing a lot of these comments as well. So that they've reduced the U.S. down to 10, and it sounds like they're getting close. Obviously, equity markets globally like that, just given two pretty big countries economically. So that's encouraging.
Right. And so then with all these trade deals going through, all the kind of excitement around it, we're getting questions a lot like, should people get more aggressive with their portfolios?
Yeah, should you get more aggressive like now that things look more optimistic? And my answer to that is no. For the same reason that like a month ago when things seemed really uncertain and obviously more pessimism, like my answer at that time, should you address strategy, would have been no, right? Because from a wealth management perspective, and there's a lot of studies on this, right? Like you cannot be reactionary to headlines, okay? It's far better to have a proactive wealth management approach where like you have an asset allocation given your phase of life, right? So that's going to look different if you're a 20-year-old that is just getting started and you're going to be playing or working for a number of years. So like that asset allocation is going to look much different than somebody much closer to retirement, right? Where they're going to need money out of the portfolio in the short to intermediate term. But then, once you have I should also mention like tax bracket status, like that plays a role. But once you have like an asset allocation and a plan in place, that then you want to be implementing that process, like rebalancing, raising cash when you need funds, right, for the person in retirement, right? To be making portfolio adjustments, like given market headlines, it's a recipe for disaster. It's a loser's game. And I realize that's contrary to what you're going to hear a lot in financial media, some stock market channels. But it kind of drives me crazy, the financial media, and what a disservice they do to most investors, trying to get them to deviate from asset allocations that work for their financial plans.
So needless to say, you're kind of passionate about that.
I get fired up over just the garbage that's like
Right.
out there. But
Well, it's what they do. It's what we talk about a lot, obviously, right?
Yeah.
A plan is a plan for a reason.
Yeah.
Stick to it. This week you're going to see inflation numbers and retail sales numbers.
yeah, that'd be interesting.
Yeah.
Yeah.
And a lot of great playoff hockey. It's been fun to watch.
So good. It's been so good. And then yesterday, Sunday, we had, I think there were 3 like decisive game 5s in the American Hockey League.
Yeah.
Just like
Yep.
down to the wire. And
Yep.
we know a lot of guys on all 6 of those teams. So it was, yeah, it's just fun. Such a fun time of year. So best wishes to everyone still playing. And yeah, have a great week.